Hi, this is Sive Morten with the daily update on EURUFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Greetings everybody, so let's take a look again on the euro currency. Well, the price action during the previous trading session was not quite in a row with the bearish environment on the euro currency, since we currently still think that market intends to show some retracement to the downside. Just to recall the previous explanation, we need to see that market should hold below the intraday 618 resistance of that swing, because although we have weekly bullish sentiment and bullish bias, the pattern that is currently forming on the weekly time frame doesn't contradict with potential move to the 127.50 area. And since we have seen this pullback from the 618 target of that ABCD pattern, we said, okay, well, that is possible, well, it's normal, since even after hitting just minor target, market could show some pullback. But this pullback should be small, because if market will exceed this resistance from that swing, that will be too much for just 618 extension. That could be possible for the 100% extension, but for 618, the breakout of this resistance and reaching probably this high or even exceeding it will be not in a row with the natural development of the downward moves, as it should happen when the market has real bearish bias, real bearish development to the downside. That will force us to think and look at the current possibility for the downward continuation with the suspicious. In general, even currently, I see some not quite logical price action for bearish character on the market. Let's take a look at the daily time frame. First of all, take a look at that. Daily trend holds bearish by the MACD indicator, but look at the price action. Price action not quite support that. So we have seen this initial moving to the downside, that's nice. Also, starting move to the downside here was also nice, but here market has stopped, turned to some pullback, now is calling around the weekly pivot point and stands, by the way, above this. So that is could shift to some sort of the bullish dynamic pressure. If this will be the case when the market holds bearish trend but price action stands flat and doesn't support it, this usually leads to the upward continuation and taking out of that high, and that probably could lead to the move according with the weekly trend. So although weekly trend doesn't contradict with the potential move to the downside, it absolutely doesn't matter that it doesn't mean that this move to the downside has to happen, because weekly time frame trend and overall picture on the weekly time frame looks bullish, and this continuation move to the upside could happen in any moment, since this is just a consolidation, small pattern. This could be a pennant on the weekly time frame or flag. That is bullish continuation pattern, and now it stands just inside of it. And will market show to the downside continuation or not? It's very difficult to predict. Currently, since market still holds below the low of this trading session, this theoretically is possible, but the price action on the intraday charts doesn't impress me from the bearish point of view. That makes me worry about the future of this potential move to the downside. Well, on daily time frame, I would like to remind you another picture that we have discussed on the previous week. Here it is. So you can see that this opportunity for this market hasn't been cancelled, and that is really pattern stands in a row with the bullish weekly bullish environment. That's why we should keep an eye on this potential. Could really come to reality if market will not stop here and will not continue to move to the downside and will not take out this low to erase this butterfly. Until that has happened, and if market will proceed this move to the upside, this could really come and play. So keep an eye on this potential on the daily time frame. Now let's take a look on the intraday charts. On the 4-hour time frame, we have not very nice situation for the bears. Here is our bearish engulfing pattern that we said probably could lead to the downside move, and that was the pattern that could trigger move to the downside from this resistance, as we supposed. That will be enough for the 618 extension on the daily time frame, and market should reestablish move to the downside. But look what has happened. Market is really pulled back to the downside, but only accomplished the target of the engulfing pattern. So if you will measure the length of this bar and count it from the close price to the downside, you will get particularly this level. So the target, minimum target of the engulfing pattern, as you know from the classical approach to trading of the candlestick patterns, is the length of the bars. That has happened. Market fast returned right back. That is also stop grabber pattern. It's fast return and re-establishing of the bullish trend. Here is another stop grabber. It's forming. So all price action that currently is forming on the 4-hour time frame is not very nice and not in favor of the bearish development. That is not just logical, because just imagine the market has hit on the daily time minor target. Market has shown the significant pullback, the 618 resistance. So the logical continuation should be, after hitting just minor target, is the continuation to the downside. If market has really bearish force. But what we see now, just respect of the engulfing pattern, hitting the target, returns right back to the resistance. That is not in a row with the development of the downside. Also take a look at that pattern. A, B, C bottom. The 618 extension, also minor extension of that pattern, stands above the high of the bearish engulfing. Two stop grabbers could lead the taking out of that high. So some bullish signs here is forming that is not nice for bears. Market again stands above the weekly pivot point, and take a look that on 4-hour time frame trend holds bullish. So if you have entered short yesterday in this area by this pattern and hasn't closed and taken profit here, maybe you have moved the stop to the break even and now stand without the position. Do not enter short currently. If you have short position still and have stopped somewhere above this engulfing pattern, well, in this case, since your stop hasn't been triggered yet, maybe it makes sense to wait, because anything could happen, despite the fact that this overall price action is not nice looking for the bears. Maybe you could close the position, because currently our bet on the potential move to the downside, although it has started nice, didn't get any continuation, and now market turns again back inside in the range of the engulfing pattern. That is not quite normal. Since we do not have normal continuation, normal price action that we have expected, it makes sense also you could at least close the partial your position, some part of your position. This current situation is a bit tricky. On the hourly time frame, what do we say? Trend also holds bullish. Here is some sort of the triangle is forming right in an area of resistance. If market will break this area to the upside, and that should happen soon, since market, you can see a stage in the last third of the triangle now, it should break out, some breakout should happen. Take a look how price action developed. Hit the resistance, significant pullback. Hit resistance again, smaller pullback. Hit resistance again. So usually this leads to the breakout. Breakout could lead to the forming of this butterfly pattern with the two targets. The 130.60 or 130.55 area is an area also the target of that ABCD pattern. A, B, C bottom, 100% extension stays precisely in the same area. So if the upward breakout will happen, the market will take in this high. I will not exclude the possibility that market will proceed higher, and that probably could trigger the bullish sentiment on the weekly time frame. That could lead to the breakout of the roll consolidation on the daily time frame. That could lead to the butterfly on the daily time frame to that pattern, and in general to further continuation to the upside. That's why the current situation is very difficult. From the one point of view, we still theoretically has no confirmation of erasing on the bearish pattern, because market still coiling below this resistance. From the other side, overall price action on the intraday charts doesn't pretty from the perspective of the bears. So if you have no position, probably it's better to stay flat to get some more clarity from the market. and finally to determine the real direction where market should follow in the nearest time. Well, about bearish positions that you probably could have since previous trading session, I just have talked previously. So that's our current view on the market. Probably some scalpers could find some possibility for trading, for instance stop grabber patterns, the butterfly that's forming. Breakout traders could try to play with this triangle that is forming currently on the hourly time frame. But in the perspective of the daily time frame, situation is tricky, and it's probably is better to wait, because to enter long after the breakout of this resistance, and probably even after breakout of this point, that point, will be safer than to try to enter long right now, but later to get some downward continuation on the market. That is also currently possible.